Tasha, what was your overall takeaway on the event? It definitely seemed like some of the executives were coming on a bit, let's say, unprepared.
Well, we're talking about sort of the event lacked sizzle. That's something that I'm surprised to hear from our perspective. I mean, Tesla announced that they're going to reduce battery costs by over 50%, increase range by over 50%, and reduce investment cost on their battery factories by 70%. I mean, these are incredible numbers. And as you know, at Ark Invest, we're long-term investors. So to hear that something is 3 years out, as a long-term shareholder, our time horizon is 5 years out. So again, I think Tesla's changing the way that electric vehicle industry works. And for any traditional automaker to catch up to Tesla now, it seems almost impossible. This $25,000 car that's probably going to have an even greater range than previous models, maybe 400 miles, let's say. I mean, what are you going to do if you're a traditional OEM and you're still kind of struggling to get your electric vehicle program together? Maybe you're even spending investment dollars on other technologies like fuel cells, which we don't think are economic. It's just going to be so hard to catch up to them at this point.
That said, shares down, almost 16% over the last couple of days. So other investors may disagree with you. What are they not getting in your view?
Well, I think, as Abigail mentioned, the stock has had a good run this year, so this could be some pullback. But I do think that there might have been an expectation for a shorter term event. But, again, with a stock like Tesla, it's disruptive innovation. That's why we're long-term shareholders, because if you do focus on the short term, you're going to miss out on those inflection points. The point at which an electric vehicle reaches price parity with a gas-powered car. That's going to cause a dramatic inflection point in demand for EVs, and that's happening in the next 2 to 3 years. So I think again, you want to catch that exponential growth, and you have to look to the long term to do that.
Let's talk about China. Musk touted that the Shanghai factory would be making 1 million cars a year. That is, another quite ambitious proclamation, given that they just got to 1 million cars cumulative. What do you make of that yet another ambitious stretch goal?
Yeah, well, I mean, we've already seen Tesla sort of pull off the impossible in China. So the factory is up and running in less than a year. They're already producing cars. It's the first wholly owned manufacturing facility by any automaker in the country, and they're frankly getting more support from the government than certainly we would have initially expected when they decided to move into that market. So I do think it's definitely been a success story so far. I think that government support is really crucial. I think the Chinese government knows that they want EVs to happen, and they want to let the technology leader in. So we've already seen them get subsidies and a lot of support there. I'm not too surprised to hear that target, especially since Tesla's announcing that now. In their manufacturing, although these changes will happen over the next few years, if they have a path to reducing the investment cost by 70% to build these factories, and then the factories are actually producing a lot more than they were in the past. Last night, Elon said that one factory is basically producing what you would expect 5 to 10 to produce. So I think it's not too difficult, sort of knowing that background, that they would expect again to have a relatively aggressive goal there. And I would say that broadly, something I do think that investors are missing in Tesla is the autonomous opportunity. We've talked about this many times before. It was mentioned a few times on the call last night. Mentioning it because China is one of the largest markets for autonomous driving. So I also think that's really crucial that Tesla has sort of this stronghold there.
Right, and they did say that they would have a full self-driving beta product out soon. Now, what do you think? Look, Tesla's one of your firm's biggest holdings. What do you think the biggest challenges are in terms of meeting your expectations? Like, what are you going to be watching? What's the catch, or what could the catch be?
Well, I certainly think that this goal So yes, Tesla's our top position. I think that the goal of reaching a fully autonomous driving platform or completing that is still really aggressive because no one's ever done that yet. So I think that right now, it's something that's hard to imagine happening. Again, because we just haven't seen it yet. Waymo, Google's project, has gotten pretty close, but they've had a lot of issues commercializing and scaling. So I think that's not to be overlooked. I think we're talking about stretch goals for Tesla. I think this has always been a stretch goal. They're pulling off something that's incredibly difficult. So that could be, when we look at our valuation for Tesla, we actually only assign a 30% probability to that happening. Now, it's such a large opportunity that it's very much still worth looking at and sort of putting the numbers to. But on the flip side of that, let's say autonomous driving doesn't happen. Our most recent work is looking at what would happen if Tesla were to launch a ride-hailing network with human drivers behind the wheel. They basically do this in order to set up the network for robotaxis anyway, but it could actually be very profitable for them to do so because they have lower operating costs than Uber and Lyft. The cost per mile to drive a Tesla is much cheaper. They could basically take a higher cut of the gross revenues than competitors and potentially pay the drivers better. We think this could be much higher margins than the core EV business. You could get perhaps a 50% EBITDA margin on this. So that's one sort of, you can think of a risk in the case that autonomous doesn't happen. They still get that recurring revenue model in that case. So we still think there's sort of a way to balance that risk.